Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's figure out what is happening so far. Honestly, pretty much the same thing we've been seeing the past like 3 days, but we'll discuss about it, give it a little bit more extra information. There's a bit more information to add on top of what we discussed yesterday. So with all that being said, if you enjoyed, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor. And of course, my YouTube section, membership section is live. The link is down below if you're interested. $3 a month in the description. You can tune in, and I pretty much share my intraday thoughts on Tesla as it's moving. But moving into a Tesla, let me actually double check here just to make sure what it actually closed at, because this is right here showing aftermarket closed pretty much flat actually on the day, pretty much down 0.03% at $222.11, and we're down a little bit extra in post market, but nothing obviously worth noting. Now let's talk about what does it mean, right? So there's a few things to discuss. So first and foremost, right, let's get the obvious stuff out of the way quickly. We had a bearish day, right? Obviously, technically, we had a bearish day even at the close, technically. But with that being said, we had a substantially more bearish day that, once again, just like these candles back here, especially the last 2 days and 3 if you include today as well, because now we're technically done. Massive wicks at the bottom, massive bear traps underneath the 200-day moving average, pretty much all to that same general range, just kind of, 216, 217, 215, right? That general range. Bought up once again, large wick, back above the 200-day moving average, but yet also another day, which started off in the morning that I did sell into, thankfully, but it pretty much closed right as sold, so that's pretty much irrelevant at this point, I guess. But a bull trap at the 21 EMA, same how we had over here, close yesterday, but not so much, but same today, right? Pretty much we're just constantly getting these wicks go above the 21 EMA, which is the resistance, and below the 200-day moving average, which is of course the support. And we're just getting massive sellers above it, massive buyers below it, right? So we're in this conundrum, right? We're in this conundrum that we're just stuck in between these two moving indicators that are essentially playing ping pong with each other, if that makes sense, right? So like I said, and I'll say this and I'll continue saying this, until we see a more confident break above, close, hold, right, those kind of things above or below one of these two indicators, I'm still in the camp that anything can happen for the most part. But obviously we want to try to figure out, okay, well, what's our more likelihood of happening, right? I still think it's to the downside. Not substantially more, like I'm 60-40, 60% to the downside, 40% to the upside. So I'm not super convinced. I'm not super confident it'll go down from here, but I am more confident it'll go down from here, right? But and I'll quickly explain why that is. First, I want to get the bullishness out of the way. Let's get the bullish stuff out of the way. So first and foremost, obviously, long wick, beautiful buying pressure by the bulls, right? MACD is still looking great. RSI is still looking great on the daily. Keep in mind, that's the daily, right? The MACD flipping like this means that even if we fall back down and the MACD kind of cools off a tiny little bit here, all it's going to do is have, hopefully you guys, let me double check, hopefully you can see, yeah, you can. Hopefully, pretty much all will happen is this green line over here that just crossed the red, it'll just come back down to the red line, probably, and essentially bounce off of it, assuming we do make that move a little bit lower, like I said, maybe 212, 210, maybe 206, right? All that's going to do is essentially almost like a retest, if that makes sense, of the MACD as the red line comes down to retest the green line comes down to retest that the red. Disney reported earnings. Let me just super quickly check on Disney, because Disney is a stock that I am kind of eyeballing right now, and it's actually green post market. Interesting. Anyway, so that's kind of something I wouldn't be surprised at, right? But nonetheless, beautiful situation here. Now, if let's say we break to the upside, let's say we break above the 21 EMA, and let's say we do move above it, what happens? Well, a few days ago, almost like half a week to a week ago, I was saying how I wouldn't be surprised if we do come down, make the inverted head and shoulders, which is still possible, or the cup and handle pattern, whatever, right? Now, the way I'm looking at it is this: because we've been consolidating here for several days in a row, and honestly might continue to do so for another couple of days, honestly, wouldn't surprise me. But because we have consolidated here for several days in a row now, it's arguably 4 days, right? The way I look at it has slightly changed. If we break above the 21 EMA / 225, somewhere around that general level, with 21 EMA sitting at about 200 and just shy of 224, but 223 to 225, just roughly that range. If we break above that, we start closing candles, especially a daily candle above that, phenomenal. What I believe will happen next is, instead of going up to 230, maybe acting as a resistance, which is still technically possible, I am now more in the camp that we'll actually just slingshot, I guess, right past this low volume area on the right. You can see if I zoom out a little bit more, right? You can see this very, very low volume area over here on the right. Hopefully you can see my camera's on the way. Beautiful, right? Which pretty much starts right as we break above this level that I just talked about, right? We're like just right on that tip of it. You know what I mean? To break above into that low volume area, which is essentially this area right here of about the high 200s, pretty much the majority of 230s, and it starts getting back up around the high 230s, and especially once we get into the low 240s, right? That's where the volume profile really starts to increase once again, which, pretty much will bring us right back to that gap fill sitting at the very low 240s, like 242 roughly, right? So with that being said, I wouldn't be surprised if that's kind of roughly what happens, right? If we do break past that we just fairly quickly move past this low volume profile area again to the high 230s, low 240s. It wouldn't surprise me. Now, that's the bullish side. If, of course, we break above the 21 EMA / 225-ish and, start closing candles, especially daily candles above. Now, let's talk about the bearish side, right? What does the bearish side look like? Okay, cool. Well, the bearish side is simply, again, kind of flip this situation here. If we break below the 200-day moving average, well, that's going to start getting bearish. And of course, like I said, close the daily candles, which we tried 3 times now in a row. The bears have tried bringing it below, and every single time it's just a massive wick below and being essentially bought up back over that 200-day moving average. But if we start closing dailies below it, if that finally starts to falter, that's when I think we'll get that move to the downside, right? We'll move to the 212 to as low as 206, at least from what I see. Don't forget the volume profile is still not super high here, but it very much increases pretty much right here. You can see really close to this gap fill, right? Like 208, 206, right? This volume profile really increases and ever substantially increases at 200. I don't think we'll get there. It's not impossible because, again, one option that we can actually do here that is a bullish pattern is a double bottom where we do something like this, right? And then we rally up. This is a possibility. So technically we might still come down to the low 200s, like pretty much roughly 200 on the dot, right? Right as where this massive volume profile increases, then, essentially acts as a massive support on top of course, the 200 psychological level, etc. Right? Technically still possible, and that would just essentially make a double bottom pattern that will look something like this. This also wouldn't be surprising whatsoever. So there's a lot of bullish patterns that'll set up even if we come down, like a double bottom. We have that inverted head and shoulders pattern, potentially cup and handle, though to me the cup and handle pattern is a little bit iffy here, but potentially inverted head and shoulders still that we talked about before, right? A few days ago, I'm sure you remember. So those things can still set up even if we get this, little move to the downside. But again, I don't think it'll be a big move because again, on the daily, on the RSI daily, on the MACD daily, Tesla's looking great, which is why I think the trajectory overall is still up. I do believe that. Obviously that can change, but as of right now and as it looks right now, I believe the overall trajectory is still up, even if we get this little move to the downside. So for instance, let's say we come down to that level I just talked about, 210, 208, roughly give or take from here, like literally from where we close today. That wouldn't even be that much of a move. That's only about a 6% move, which for Tesla is not a lot. That's like a day or two of action, and you can really pretty much recover that within a day or two once again. So that's the way I'm currently processing it. Now, let's back that up a little bit more, right? Going over to the 65-minute chart, right? One of my personal favorite time frames to look at because this gives me a very good idea as to what to expect for the next maybe week, roughly, maybe week, few days, week. And the way it's looking at right now, sorry, I got something in my throat. The way it's looking right now, the most important thing to look at is 2 things really. Number 1, we have the MACD, pretty much just going straight sideways, not really showing, I guess slightly bearish, but not really showing true, it's not really picking a direction, right? It's just very contracted. But more importantly than that, we also, of course, have the RSI. We still have a bearish divergence setting up because essentially as we're pretty much either making higher highs on the closure of candles or making the same highs, which is what we're doing right now. Today's close is essentially the same close as this candle right here, but the RSI in both scenarios is making lower highs. It's constantly showing like weakness. It's slowing down. It's not showing the same strength as the actual bars on the chart are, right? That to me, of course, is a bearish divergence, right? It'll be an even more so if we continue making even higher, like if we go to like 224 and start closing a candle there, and then we're still not making higher highs, right? That's even worse. But as of right now, it's a mediocre, I wouldn't say it's the best looking bearish divergence I've ever seen, but it's a mediocre bearish divergence, but it's not something I can personally ignore. I love looking at bearish and bullish divergences. It's one of my favorite ways to decide on a trade, on a swing trade. And right now, this is a bearish divergence. And especially the fact that we keep getting rejected by that 21 EMA, I'm not very confident that we will rocket past it just yet. Obviously, things can change. If we start closing those candles, like I said above, that can change pretty quickly. But as of right now, it's kind of a limbo land. It's kind of a guess. Like at this point, in my opinion, it's anyone's guess. If we get that little quick drop first and then rally, or we just get a straight rally from here, maybe set up a bull trap and then maybe come down. It's anyone's guess right now until we get more confirmation, since we're just going sideways between these 2 massive indicators which of course are the 21 EMA and the 200-day moving average. So that's the way I'm kind of looking at it, right? Taking a quick look at options flow. Let's go ahead and increase the premium over here, right? Make it a little bit higher. Let's make it much higher. Actually, okay, that's a little too high. Let's go. Okay, we'll keep it as usual, somewhere around here. So we have some bullish flow, right? But the bullish flow is well in advance of where we are today, right? We have a 1 million premium here, but that's for December of 2025. Way farther away. That's pretty much as good as buying shares at this point, I feel like, right? So essentially, it doesn't mean anything short term. Then we have here, January 2025, once again, right? Decently, still pretty far away. I just remember we're not even in 2024. Sometimes I get the years mixed up. We're still in 2023, almost 24, but nonetheless, January of 2025, that's a year and a couple months out, right? So there's still a lot of time on this as well, but a decent sized premium, almost 1 million as well. However, on the short term, we have some, bearish flow coming in a little bit. Again, nothing crazy. 400K premium here. We have a bunch of 1 to 200Ks here. We have a 400K here. We have a big red circle one here, about 500K, right? 220 puts, 210 puts, right? Short term too, as well, right? This one is like January. This one over here is November 23rd. November 17th of 2023, which is not this coming Friday, but the following Friday. 500K premium, right? 220 puts. So that's a decent one, right? But again, not substantial. I personally, the way I look at options flow is I want to see something substantial. I want to see like a 2 million premium, something very substantial, because that gives me more confidence, right? That gives me more confidence that someone might know something, or some whale, someone with a lot of money knows something. And usually someone that has a lot of money, not always, but usually, well, they don't get to having that kind of money without some information. Let's just say that. So, that's why to me, these, even though they're worth mentioning, it's with a grain of salt. At least that's the way I look at it. Obviously, you don't have to. You can take a look at this information that I just presented to you, take it in an entirely different way, and that's completely your choice, obviously. That's just the way I like to look at it. But those are the main things I'm looking at, right? Take a look at the Bollinger Bands. We haven't taken a look at these bad boys in a while, right? But the Bollinger Bands, you can see the white line, the red line, and the green line starting to contract as we've been consolidating here. You can see them kind of clawing into each other like a mouth about to bite down on his food, right? Just completely clawing in. So if we move down to the downside and then maybe come back up again here, it's going to give these a lot of time to really get tighter and tighter and tighter. In my opinion, set up what is going to be that beautiful end of the month, or closer to the end of the month rally, which is what I'm personally looking forward to as well. So that's kind of the main thing I'm looking at and what I am currently expecting. So yeah, if you guys enjoyed the video, don't forget to hit that like button, as it does help a lot. And we continue playing the waiting game, the patience game, until we get a nice little, confirmation here. So until then, yeah, thanks for watching, and I'll see you as usual tomorrow. Peace.